Policy in Washington is driving Wall Street. We draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Let's check in on how some of these key commodities are tracking at the moment. We're seeing some modest gains for copper and iron ore, still holding on there above $100 per tonne. The real action, though, in the commodity space right now is with crude, because we had the OPEC Plus announcement over the weekend. The production going to be increasing again, 547,000 barrels a day from next month. Saudi Arabia has scope to add even more if it wants to, but we did not get a huge amount of clarity on the next move. The IEA, meanwhile, sees the world on track for a 2 million barrels per day surplus in the fourth quarter, and of course the demand outlook not exactly robust at the moment either. Let's get a little bit more on this with Energy and Commodities editor Ben Sharples. So Ben, more oil. When is this flood of oil going to end?
Oh, it's a good question, Paul. Probably after this one, I suspect. We're moving into a market that is forecasting, or some are forecasting, are going into a big surplus from the fourth quarter into the first quarter 2026. So I suspect after this, you're probably going to see a pause, even though OPEC Plus is flagging or talking about possibly bringing back more. It's very difficult to bring back more into oil into a market that is likely to see quite a sizable glut.
There's certainly unfinished business, right? How much of that depends on what happens with the global trade outlook?
Well, like most things, Heidi, you've got Trump's tariffs in the background. That's probably the big unknown for many financial markets. If you look at the price action at the moment, actually, 1% move in the morning, this increase was well telegraphed to the market, so the market knew it was coming. Immediately for oil, there's a few things on the horizon that we really need to look out for. There's that 10-day deadline that Trump was talking about for Russia to reach that truce, and what that means for Russian oil. Is that affected? It's a huge part of the market. If that's affected, then we can see prices move again. But at the moment, demand is good at the moment. We're in that summer seasonal demand period, so people are travelling, oil is being consumed, so it's good. And that's probably why adding oil into this market, it doesn't look so bad. Once we move past summer and into those winter months where demand goes down, that's when you'll really see the pinch on the market. Prices up around just below 70. You're probably going to see them decline especially if OPEC Plus add more barrels. But we're going in from a period of really good demand, robust demand at the moment, but as we move closer towards the end of the year, it starts to fall off. Into 2026, it starts to fall off as well, and then you've got that surplus that is putting extra pressure onto oil prices.
What's happening when it comes to rig count in the US, particularly as we're starting to get that weakness in the data come through?
Well, Heidi, you heard Trump talk about, U.S. energy can pick up the slack here, especially in reference to Russia. He made that comment last week. But the reality is, OPEC, the shale guys, are hurting as well. The tariffs, they're not getting clarity on the tariffs. It's adding to their business, and we're seeing that rig count fall. So, the shale guys aren't going to fill that void, and they themselves are hurting from the uncertainty or the lack of clarity around these tariffs and everything else that goes on with that. So, it's falling there. It's starting to ease. I wouldn't say fall, it's easing, but it's not a sector that's going to perhaps outperform, I'd say.
Bloomberg's Ben Sharples there with the outlook for crude. And speaking of Russia, President Vladimir Putin says his war goals in Ukraine are unchanged. It comes as the Kremlin continues to rebuff US pressure for a ceasefire with Kyiv. Let's bring Bloomberg's Michael Heath for more. We've also heard that President Trump saying that he's moved to nuclear subs, US subs, after these continued trading of barbs with Russia. But it doesn't sound like Putin's changing his strategy.
No, he's not. And excuse me. And President Trump's, his constant, deadlines that he's been setting. He's shortened it now, and his threat about secondary sanctions. When it comes to India or China, the buying of Russian oil, as Ben mentioned, that is significant. But the question is that there's probably not a lot of belief in Russia that President Trump is going to follow through on this. There's been no signs so far. They have this bill in Congress. The US has this bill that could impose quite severe sanctions on Russia. The deadlines come and go, so we just have to see him. And if he does actually act on it, then you might see Russia start to more seriously consider things. But at the moment, Ukraine's basically on its heels. Putin also said that Russia's advancing along the battlefield. Now that's at a snail's pace, but nonetheless they're going forward. So the view in Moscow is that the West continues to be divided and weak, and that's perfect. That's what was expected under Trump, and they can keep pushing forward. They pay heed with these prisoner swaps and that sort of thing, but it doesn't look to be anything significant on the horizon.
In terms of acting, though, President Trump has said that, he's going to move 2 nuclear submarines in closer proximity to Russia in response to what he called highly provocative statements. Is this highly provocative act going to move the needle at all?
Well, look, it's quite an extraordinary thing because Dmitry Medvedev, the former president of Russia, is a pretty obscure figure these days. He was moved to the deputy head of the Security Council. He's fallen out of favour. He was once known as a liberal in the Russian administration, and that administration is basically run by pretty hardline KGB guys, and so Medvedev's always seen as weak. So for years he's been issuing these outrageous things on Twitter, threatening to pulverise Paris or London and these sorts of things, and everyone has rightfully ignored him. So the idea that the US suddenly picked up on this to move these submarines, it'll make Russia take note. There's no question. We may start to see Medvedev tone things down a bit. It's just the reason that he could get away with it was no one took him seriously. So it may well be that that perhaps President Trump's using that as a way to exert a little bit of pressure. We'll have to see, but a very unusual person to respond to, definitely.
Are we seeing Trump kind of run out of options when it comes to how he's trying to achieve his foreign policy goals?
Yeah, well, look, what seems to be happening is that having gone through the campaign saying he could fix all these things that President Biden couldn't, reality is starting to make itself felt here. And the reality is you must arm Ukraine. The reality is you must actually take serious measures against Russia. The reality is that the regime in Moscow will only respond to force. And similarly in the Middle East, when Trump does, he does have this, I guess, there's an uncertainty over how he'll respond, which actually is quite helpful for him. But, he has to sort of follow the processes in order to get things done. And when it comes to Russia, it's always been very simple. Show force, show strength. Russia respects strength. Show deference, show division, and Russia will walk all over you. It's not particularly complicated stuff. So what we're seeing is sort of, I guess, a move gradually towards a more mainstream type of foreign policy than we'd seen in, when he was an opposition candidate.
All right, Bloomberg's Michael Heath there. We have more heads on the Asia trade. This is Bloomberg.
is here.
The earnings are front and center. A slew of results already out.
Are tariffs going to eat into margins?
Bloomberg is first to break the numbers.
JP Morgan, Citi, Wells Fargo, Bank of America, Goldman, Morgan Stanley.
I'm getting my spreadsheets ready.
With the smartest insights.
It's going to be a can-kicking situation.
Expectations are relatively low.
The market is looking for confirmation of that growth narrative.
Continuing coverage on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
We'll have Japanese markets opening at the top of the next hour. This is how a few key assets are looking ahead of that. We've still got a fairly weak yen at 147.27 right now. We're keeping an eye on bond futures as well. Pointing up at the moment, we did see bonds rallying pretty hard in the US after that revised payrolls data. We've seen yields slipping in other markets as well. Nikkei futures, meanwhile, pointing pretty solidly to the downside at the moment. It was a pretty weak session to close things out on Friday. Currently, Nikkei futures off by almost 2.4%. Well, Toyota and Honda are going to report earnings this week. Analysts expecting a mixed picture. A stronger yen and US auto tariffs are going to eat into profit despite resilient unit sales. Joining us now from Tokyo is Koto Yuzawa, head of Asia Auto Research at Goldman Sachs. Koto, thanks so much for joining us today. So looking ahead to the earnings from Honda and Toyota this week, what sort of impact do you expect to see from tariffs and the trade environment on the outlook?
Thank you for having me. Yes, we do expect the tariff impact to be quite big for most of the Japanese auto, but it's probably less than feared. Based on 25% tariff over Japanese made vehicle, we were expecting 3.5 trillion negative impact across the board for automotive sector in Japan. But now we can probably see around a 2 trillion yen type of negative impact. Still a big number, but relative to the 25%, very recent tariff update was a positive event and less than feared.
In terms of the quarter that predated the trade agreement between the US and Japan, what are you expecting to see in terms of that impact on earnings, when it comes to front loading?
Well, I think we probably have to closely monitor the situation over Mexico and Canada and the rest of the region. Japan-U.S. trade negotiation went okay, so I think there should be a certain, numerical update from the company management, such as Toyota and Honda. At the same time, we said 2 trillion yen type of negative impact, but there should be a certain mitigation effort that all automaker will probably try, including the price hike action in the United States starting from September. So we're constantly monitoring the situation, how much they could actually recover from the negative impact of tariff.
Is the outlook when it comes to EVs and hybrid vehicles looking a little like it's going to gain a bit more momentum?
I do think that the hybrid momentum will probably accelerate. It's not directly related to the tariff argument. I think it's more like a milder environmental regulation from U.S. government, ACC2 cancellation, and also the milder mile per gallon regulation in the United States. So starting from October, I do believe that hybrid sales momentum would even accelerate in the United States market. On the back of on the other hand, probably battery electric vehicle sales may probably potentially slow down. For Japanese makers, having a large exposure to hybrid sales is probably get benefit in the second half of the year.
We've seen Japanese automakers sacrificing margin to an extent to try and stay competitive, particularly when it comes to the US market. Do you think this will change if we start to see major suppliers passing through tariff costs, logistics costs, and is that going to sort of alter the price dynamic?
Thank you for having me.
Well, I think not only Japanese makers, but also all automaker operating in the U.S. probably have to think about the price hike. It's probably less than fair in any case. Based on 25% tariff over Japanese model year, we were expecting sometime in September could be the one trigger across the board that all automaker will probably try in Japan and raise price in order to mitigate some of the negative impact of negative tariff, and also still a big number, the negative impact from the inflation pressure in the United States. Tariff update. Subaru, one of the company, already announced a 4.5% price hike in U.S. back in May 20th.
In terms of the quarter that predated the trade agreement between the U.S. and Japan,
not really
what are you expecting to see in terms of that impact on earnings when it comes to front
the price
loading?
hike action would probably I think happen altogether. We probably have to. There could be a certain, acceptance among U.S. consumers for this kind of price hike.
Well, all Japanese automakers now facing tariffs in the US that weren't there a year ago. To what degree can Japanese automakers go to other markets that aren't now so heavily protected to make up the gap?
Effort that all automakers will probably try. We see increasing competition in the Southeast Asia, Australia, and also how much they could actually recover from the negative impact of tariff based on this tariff
Is the outlook when it comes to EVs and hybrid vehicles looking a little like it's going to gain a bit more momentum?
Try to gain market share in those countries. I do think that in order to mitigate the negative impact of the U.S. Having said that, as I mentioned, if the incremental tariff over Japanese made vehicle is at 12.5%, that's already determined, then it is not easy, but it's manageable. I do believe that all Japanese makers to make a certain price action while keeping market share in the U.S. So Japanese makers' U.S. situation could be okay. Then rest of the country, yes, it's a competition, but all in all, I think Japanese maker could probably maintain okay type of margin into the second half of the year.
Do you expect that Japan will have much success in trying to push for lower tariffs on autos with the US?
I do not think so. They're not really trying to achieve volume or market share. They're clearly focusing on profitability. And with this price hike,
we've seen Japanese automakers sacrificing margin to an extent to try and stay.
But I think none of the Japanese maker would try, doing a massive promotion in order to just gain market share by sacrificing their margin. I don't really think so. We expect the incremental 12.5% sometime in September make it be the one trigger automaker in a critical, difficult situation. As I mentioned, 12.5% is something manageable for Japanese automakers.
Kota, really great to have you with us. Kota Yuzawa, the head of Asia Auto Research at Goldman Sachs, joining us from Tokyo. Well, Nintendo says it sold more than 6 million Switch 2 consoles in the product's first 7 weeks on the market. The company kept its full-year forecast unchanged, saying it expects to sell 15 million units by March. For more Bloomberg's Serena Sasaki joins us now from Tokyo. So obviously this was a highlight in terms of what investors were looking at. What else jumped out to you in these numbers?
Yes, so the big takeaway from Friday was the strong beat across all major metrics driven by an explosive start for the new Switch 2 console. Or near, that's 65% above consensus. And then revenue soared 132% to 572 billion yen, and massive growth of the back of 5.8 million Switch 2 units sold and 8.7
not only Japanese makers, but also other Asian players, OEM, will probably try to gain market share in those countries in order to mitigate the negative impact of the U.S. Having said that, as I mentioned, if the incremental tariff over Japanese made vehicle is at 12.5%, that's already determined, then it is not easy, but it's manageable for almost all Japanese makers to make a certain price action while keeping market share in the U.S. So Japanese makers' U.S. situation could be okay. Then rest of the country, yes, it's a competition, but all in all, I think Japanese maker could probably maintain okay type of margin into the second half of the year.
Early cycle hardware dilution.
Do you expect that Japan will have much success in trying to push for lower tariffs on autos with the US?
Did Nintendo leave the full year forecast unchanged?
I do not think so.
Yeah, that's a great question. And frankly, that's what puzzled many analysts on Friday. Nintendo reaffirmed the full year revenue guidance of 1.9 trillion yen and operating profit
Market data connection re-established.
320 billion yen, both far below consensus expectation.
Not going to make like any automaker in a critical difficult situation. As I mentioned, for 5%.
March figure that looks low given the current pace. They've already sold 6 million in less than 2 months, but there are clear reasons for this conservative stance.
Well, Nintendo says it sold more than 6 million Switch 2 consoles in the product's first 7 weeks.
And 155 euro against yen against the euro, and uncertainty around U.S.
From Tokyo. So obviously this was a highlight in terms of what investors were looking at. What else jumped out to you in these numbers?
Yes, so the big takeaway from Friday was new Switch 2 console, and an operating income rose to 57 billion yen, that's 65% above consensus. The revenue soared 132% to 572 billion yen, and massive growth off the back of 5.8 million Switch 2 units sold and 8.7 million games and in just 7 weeks. Much of this strength came from early global demand, particularly in U.S. and Europe. So 20% sales velocity. Mario Kart World, a title that sold 5 million units and with many consoles, especially without the price gap, compressing average selling prices. Product pipeline. So despite this, the October launch of Pokemon Legend, will be a major test of software strength.
So the margins depend on the software outselling hardware.
So continued momentum from the first party title like Donkey Kong, and frankly, that's what puzzled many analysts on Friday. Nintendo reaffirmed the full year revenue guidance of 1.9 trillion yen and operating profit 320 billion yen, both far below consensus expectation. There are still Switch 2 by March figure that looks low. $140 against the dollar and 155 euro against the euro, and uncertainty around U.S. import tariffs, where 20% duties on Vietnam shipped. So Nintendo's guidance looks like it's building a cushion, particularly on profitability with Samsung.
What are some of the risks for the second half then?
Yeah, so there are 3 main risks. One is the tariffs. A new 20% U.S. tariff could eat into margins. Nintendo President Furukawa said they might pass costs to customers, but that could hit demand in price-sensitive markets. USB sees a potential operating loss in hardware segment once tariff bites has been strong. The question is whether it can maintain sales velocity through third and fourth quarter, especially without the price cut. Then lastly, product pipeline. The October launch of Pokemon Legend, DHA, will be a major test of software strength. The margins depend on the software hardware. So continued momentum from the first party title like Donkey Kong, Banana, high margin software, and tariff proves less disruptive than feared. There's a case to be made for upward revision to full year revenue. The profit forecast lasts later in this year.
Bloomberg's earnings specialist Reina Sasaki there on Nintendo. Taking a look at Japanese bonds, which are also At the moment, the 10-year bond futures rising as we continue to track the rally in treasuries, the fall in the Friday session for U.S. Treasuries, rallying as traders ramped up their bets on deeper Fed rate cuts, more of them, and starting soon. But that continues to play out in the Asian session as well. We're also seeing BOJ watchers bring forward their forecast for Japan's next rate hike. We had some clarity, of course, over trading as October.
And you can catch Japan Ahead every Monday, 8:40 a.m. if you're watching in Tokyo. And subscribers can watch live on the terminal using the TV Go function.
Tune in. Business Week Daily.
We got to talk crypto.
From the magazine that company, bringing you insight on the people, companies, and trends shaping today.
Very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgate.
Every business day at 2 p.m. Eastern, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need. Live every weekday, only on Bloomberg. Context changes everything.
Nintendo shares set to react to its earnings report. Million units of its Switch 2 console over its first 7 weeks on the market. Nintendo, though, keeping that full year forecast unchanged. Nippon Steel's also going to be in focus after announcing it's going to implement improvements to boost US Steel's profit over the next 3 years. Of course, we will be watching Asian energy supplies as well. OPEC Plus this time 540 pretty much reverses all the production cuts that began back in 2023. Not a lot of clarity, though, from comes next. The IEA, though, sounding a note of alarm on the out demand, seeing a $2 million barrel a day surplus in the fourth quarter.
After such a period of consternation for global bonds, particularly at that longer end, we're now seeing that big surge. Bond yields just falling through the floor on Friday with the US jobs report, really convincing and sort of market participants that we're going to see more moves quicker and at least two. The surprise downward revisions to that payrolls data really spurring that sharp rally that we saw in treasuries. We're seeing a move in New Zealand. Have cash trading for Aussie government bonds, though, closed on Monday for a bank. Next, and bond markets will be core to that. This is Bloomberg.
are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
You missed it on Bloomberg Insight.
I think it is wrong to say that China in this area has the upper hand. We are both vulnerable. We are both interdependent.
Yes, so what Trump sees as anti-American is survival for other countries. And to some extent, if he comes down very hard on the Southeast Asian countries, I think what he's going to find is that China is the beneficiary, not the loser.
Don't miss Bloomberg Insight live weekdays.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Million people dead, at least. That's what they have, but I think the number is much higher. And the leaders of each country, Rwanda and the Congo, they were great. They were great, and they wanted it stopped. 31 years it went on. We stopped a lot of wars. Serbia, Kosovo was going to be happening, and I don't believe it will now, so we stopped that one too. Yes?
You said you had more of an update to give us on Gaza, on the Gaza Strip. Can you give us any?
Only we want the people fed. And we're the only country that's really doing that. We're putting up money to get the people fed. And Steve Witkoff is doing a great job. And we want Israel to get them fed. We're giving some pretty big contributions, basically to purchase food so the people can be fed. We don't want people going hungry, and we don't want people to starve. And there's some bad things happening. I think it's sad. Look, they're in a war. Some horrible things happened on October 7th, as you know. It was a horrible, horrible thing. One of the worst I've ever seen. I've seen a lot of bad things since I'm president in terms of wars and potential wars. I mean, if you look at the one that we just stopped, there are thousands of people being dead already at the border between Thailand and Cambodia. Thousands of people. And I mean, I've seen some bad things, but that October 7th was with Hamas was really, really bad.
Mr. President, can you give us an update on Steve Witkoff in Russia and what happens on Friday if the deadline comes and Russia has not agreed to a ceasefire?
Well, there'll be sanctions, but they seem to be pretty good at avoiding sanctions. You know, they're wily characters, and they're pretty good at avoiding sanctions. So we'll see what happens. But Steve is focused right now on the border in terms of, we're talking about with Gaza, getting people fed. And he may be going, I think next week, Wednesday or Thursday, may be going to Russia. They would like to see him. They've asked that he meet, so we'll see what happens.
Mr. President, what advice do you have for Republicans on Capitol Hill heading into midterms? What do they need to do? What can they do to, hold?
Well, one of the things they're going to be talking about pretty soon are the tremendous drop in drug prices. You know, we've cut drug prices by 1,200, 1,300, 1,400, 1,500%. I don't mean 50%. I mean 14, 1,500%. Because we're going favored nations. We want the same price as Europe gets. We want the same price as other country gets. And over the years, 25, 30 years ago, it started where they were charging us much more. And I put an end to it, with a letter that you saw last week. So I think that's going to be a point. I don't know how anybody could win an election if they're on the other side of that issue. So we'll be dropping drug prices. It'll start over the next 2 to 3 months by 1,200, 1,300, and even 1,400% and 500%, but not just 50% or 25%, which normally would be a lot, because the rest of the world pays much less for the identical drug, and we're going to be paying the same.